Hey, good afternoon, everyone. It's Coach Chris from AccuTrader.net coming at you with a little different video than I've been putting out recently. I'm recording this at 7 p.m. Central Daylight Time on Saturday, August 24th, 2024. And what I want to present in this video, like I said, it's a little different, but it's a concept that I think is worth investigating, and it has to do with diversifying your portfolio as far as your investments in order to hedge yourself in the event that some black swan event would happen. And what I call a black swan event is it's like COVID. It's an event that occurs that just seems to come out of the blue, but it affects things on either a national or a global scale dramatically, either the financial markets or it's some type of act of nature that affects major industries and things. And what it does is it carries over into the investment industry and can have a very detrimental effect to normal investments like stocks and bonds and that type of thing. And the other reason I'm recommending we do this the way we're doing it is there's a lower cost to entry, yet you can use the power of compounding. A lot of Einstein called compounding the ninth wonder of the world, because when you look at compound interest of how it can affect your wealth building abilities, it's really amazing. I'm not going to get into it in this video, but you'll see how it plays into this. The reason I'm choosing cryptocurrency, primarily BTC or Bitcoin, is right now the US dollar is the benchmark, let's just say, or the gold standard for countries all around the world to base their investments on. It's the most stable currency. It has been for some time. And so they feel comfortable using that as their standard. Well, if something should come into play that would affect removing the US dollar as the standard for companies to invest in, it will dramatically have a dramatic effect on all your investments. And this isn't some type of fear mongering. It's I'm not saying it's going to happen, but there is a small percentage that it could happen, and you could find yourself in a very difficult financial position if everything were to change. And the primary reason I'm not saying it's imminent or that it's going to happen, but if you look at the way inflation reacts and the amount of money that was printed by the U.S. government during COVID, and to pay down, to get the economy moving again, it could really, really spiral out of control, and we could find ourselves where other countries no longer feel that the dollar should be the standard, especially, say, if Russia and China or else another major company decided to pull away from the dollar, or we had some kind of a conflict with them that they no longer were going to invest in it and pulled all their money out of our bonds, we would have a terrible situation, because the primary buyer of these bonds are other countries, okay? And with all of the turmoil, we saw this a year or two ago, with all of the political turmoil and things going on in the United States where they weren't getting anything done and they were just spending money with no real repayment plan in place. Some of the bond rating companies downgraded the United States. And if that got to another degree, some of these other countries could say, hey, we're not going to use the dollar anymore as the gold standard. And the reason I'm getting into all that is what typically happens then is another asset class is used to hedge against that. In the past, when I was younger, we would use gold as that hedge. Gold was what we call a hedge of inflation. It held its value. Well, now we have an alternative called cryptocurrencies, primarily Bitcoin, who could serve as that same function. And I'm going to show you a way how to possibly start adding cryptocurrency to your portfolio in a systematic way, in an economical way that makes sense, and it's something to consider. Now, you don't have to use the exact method I'm going to show here. I'm not trying to sell you anything. I'm just showing you a potential method of how you could do that and how you could actually earn free crypto. It's not technically free, but in a sense it is, because you're using the profits made on another investment to buy the actual crypto. You're not directly investing in crypto. It's kind of a way around it, and you'll see how this all makes sense in a moment. But I do need to make this disclaimer that this is not investment advice of any kind. It's purely theoretical. It's for educational purposes. Please, please, please do not buy or sell anything on margin. That should have an N at the end. I see what happened here. I'll correct that later. And or trade options, stocks, if you do not know what you are doing, okay? This is just a way that you could maybe do this. This is how I'm doing it. Not to say you're in the same position. You may but if you are thinking of doing it and actually implementing this, do your own due diligence and research. And once you feel comfortable, both in terms of what you have to invest, what the risks are, that may be something for you. So I am not selling anything here. I'm simply showing you what I'm doing. And I'm calling this, it's a way to introduce an alternative way to invest in crypto, primarily Bitcoin. Now, if there's anyone that has further questions, please leave them in the comment below. And I'll take your criticism also. You know, if you think this is really stupid and doesn't make any sense, that's fine. I don't know it all, and I never claim I will. But I'm always trying to learn new methods to help get to a better place. And I think that's what this could be for some people. Now, the only prerequisite for this is that you have a brokerage account that gives you margin. Now, you do not need margin, but it will give you leverage as I show you what the system actually is, and that it also allows you to trade options. And with most brokerage accounts, they will allow you to do that. Robinhood should, Tasty Trade, Schwab, all of the big ones. Fidelity should give you the chance. But inquire with the brokerage account if you don't already have one, that all this can be possible. And all that margin is doing is it allows you to buy stock or other equity and actually buy more of it, because what you're doing is you're using your investment capital that's already in the account. They will give you up to 50% of what you need in what we call margin. It's like a loan that they give you, but it's backed by the securities in your account. So for instance, if you wanted to buy $2,000 worth of stock, you would only, in most cases, have to put up $1,000, 50% of it in actual cash or investment capital. And then the brokerage account, a brokerage company, will give you the other half, as long as, and you use the stock as collateral against that. So here's the system I'm talking about. Step number one, we're going to purchase 100 shares of a company called Mara, M-A-R-A. That's their ticker symbol, and I'm going to show you a little bit about that stock in a minute. Mara is Marathon Digital, and they're involved in the cryptocurrency mining. They mine cryptocurrency, and they are developing an infrastructure of computers that are powered by eco-friendly sources like wind power, solar power, etc. And then they also lease out that computing capability to other companies to mine cryptocurrency. So in essence, although you're not investing directly into crypto, this stock will move based on the price of crypto, because it's so intra-related to that industry, because they mine crypto, they always have an inventory in their stockpile of crypto, and so it moves very, very similar in price to crypto. And at the end of the video, I'm going to show you some other stock companies that are the same, that act the same. They follow the price of crypto very closely. So right now, Mara stock, and I'm going to show you this in a second, is trading at, as of the close of Friday, $18.69 a share. Now, in order to do the method that I'm teaching, you need at least 100 shares. And I'm going to show you an alternative method in a second where you don't have to have all 100 right up front. But in order to buy that 100 shares, I'm going to just round that to $1,900. Most brokerages are going to require you to have about $1,000 worth of margin with them, okay? Or if you have $1,900 or $2,000 in there already, you don't have to worry about it. You just buy the shares. Now, an alternative method, if you don't have that initial investment capital, is to begin buying as many shares of Mara as you can. So say you could invest $200 a week or $200 a month. You could buy 10 shares, and in 5 times of doing that, you would reach your 100 shares, and then you'd be in a method then, or in a position then to go to step 2. And either way, you would have that that exposure to the crypto industry that we're looking for. Now, the other thing I want to just say real quickly is there is an idea out there, and it's being proposed by a lot of people, that the United States used to be, their currency used to be backed by what we call the gold standard. And so, in other words, there was a place called Fort Knox where the United States had all of their gold stored. And so that gold was used to back the dollar. Well, I don't know exactly when it happened, but our currency is no longer on what we call the gold standard or based off of an actual currency. Well, because Bitcoin, BTC, is a limited asset, there will only be it's either 12 or 21 million, I can't remember offhand, but you can research it, Bitcoin ever created. And so it's a very limited asset. And also there's an extensive infrastructure built out there for using it as a trade of value, where through their blockchain network, you can instantly transfer this wealth back and forth electronically. So what these politicians and other leaders are saying is the United States should create what's called a digital Fort Knox. In other words, they would buy as much crypto as they can, start out with a number, and keep that in a secure area, so that in a sense then that would be enough capital as Bitcoin became scarcer and scarcer and increased in value. The U.S. government would control that amount of wealth in this digital Fort Knox. And I think it's an excellent proposal. We'll see if it goes anywhere. But that, since we don't have the gold standard, at least we would then have a way to back our capital in a asset class that would continue to not only protect wealth but actually increase in value. So I got off topic a little bit. So once we have these 100 shares of Mara stock, what we're going to do, and I'll show you how this works in a second, we're going to sell a weekly covered call option against the stock. And we're going to set the price of that option at either the strike price, at either 50 cents or $1 above the current price that the Mara stock is trading at. So what I've clicked over to is a website called Option Strat. And what this is used for is to calculate returns on options, both buying, selling, and different investing in options. So, as I said, right now, if you look up here, we're looking at Mara. The stock closed at $18.69, which was up $1.83, almost 10% on Friday. So across here is the expiration. Every option has an expiration date and a strike price, okay? And what happens on that date, if the price of the shares are trading above the price of that option, the person who has bought, because we're going to sell this, the person who has bought that has the right then to purchase your shares at the price of that option at that time. Okay? And so what I'm recommending is we sell a covered call option, because we have the underlying stock, at either 50 cents to $1 above the price where the stock is currently trading. So it's trading at $18.69. If we go here and we sell a $19.50 call option against it, we're going to make $50.50 when we sell that option. Now, one of two things is going to happen. On the 30th, when this expires, options expire on Friday, if the price is below $19.50, you will get to keep that $50.50. And then you'll be free to sell another option at a future date at a strike price, at whatever strike price you determine. If you sell an option at $19, which is about, 40 to 50 cents above where the stock is currently trading, you would get $69 in income. And if the stock closed below $19, you get to keep that $69. Otherwise, what will happen if the stock is trading above the price of this call option, the strike price that you sold, you will receive that amount of money in income. So, for instance, let's use this $19.50 as an example. You would receive $1,950, and then the owner of that option would get your 100 shares. So if you take the $19.50 you would bring in, you sold the shares for $18, and let's just call it 70 cents, you would make, what is that, approximately $80 in profit on the stock, plus you'd get to keep the $50, so you'd make about $130. And it would be the same here. You would get the $19 that you received in the sale of that stock, plus you would get to keep the $69 you received in option premium. And then if your shares are called away, you just start the process all over again. Rebuy the shares and go on. Okay, now I got to move this down. Oh, excuse me 1 second. Let me move this down. Get back to our document. Okay, there we go. Okay, so this is the step 3. One of two things will happen. If the price of the stock is above the price of the call, you just keep the option premium. If it's equal to or less, your shares will be called away. You'll get the money that you sold the strike price at, plus the option premium. So like in this example, if we sold the $19.50 option, strike price option, you'd get the $50, okay, plus the $81 in premium you got for your shares, or an income of $131 in 1 week. So that's a 13% 1 week return. Then what I'm recommending is you use the profits from the sale of the options to buy the actual underlying cryptocurrency, in this case Bitcoin, or ETH if you want to diversify a little bit more, from either blockchain.com or coinbase.com. So this is in essence how you could get free, the free crypto, is you're using the income generated by the sale of these options to actually invest into the crypto the underlying crypto, and then over time you build up a nice little stash of cryptocurrencies. Or you could reinvest it back into more shares of the underlying, in this case Mara, and then when you got to 200 shares, you would just keep doing this over and over and just compounding and growing your wealth. Okay, so I'm going to show you on the screen here the stock price. This is a chart of Marathon Digital Holdings, Mara. This is a daily chart for the last 12 months. So you can see the stock got up to as high as $34, and it was at its lowest $6.71 back in October of 23. So you can see we had a nice run up, pull back. As crypto fluctuates, so does the price of the stock. We're currently almost in the middle of that price range right here, you can see. And this is good because we want something that has some volatility of it so that the price of the options remain high, and that we can, over time, use that income from the shares of those stock options to invest in the underlying cryptocurrency. Okay, this is Option Strat that shows how pricing of the actual options at different strike prices works. And so then you would just, the next week, turn around and sell another one. This is the Mara.com website, and I'd invite you to go take a look at it. What they're doing is actually pretty amazing. Some of these data centers that they're building all around the world. Huge power. And they're partnering with a lot of different companies in the space and purchasing other companies and just really expanding at a very fast rate. And so here's how it would work again. Your stock purchase price would be $1,869, the approximate margin requirement right here at $1,000. And then this is a breakdown of this current week's what you would make. You'd receive $50 in income either way on the sale of the $19.50 covered call. If the stock is called away, you'd get the $1,950, which would be roughly 80 some dollars. So you'd add that to the 50 you already made, and you'd make the 13%. If the stock is not called, you'd make the $50, which is a 5% return, and then you'd get to sell the next week's option. Here you would just start over, buy the stock again, sell the next week's covered call, and just repeat the process, okay? And then what I'm recommending is you take the income from selling those covered. Okay, sorry about that, guys. A dog saw a squirrel in my backyard and went absolutely bananas. So you would take the money made from selling those covered calls and reinvest in crypto. And it doesn't sound like a small amount, but if you invested $50, say, every week buying crypto, times 52 weeks, that's going to be $2,500 minimum. You know, and so you can see how this can really compound and add. And then if you get called away, even better. Now you got $131 to invest. So now, like any investment, there are always risks involved, okay? The risks in this case are that the Mara stock price would drop suddenly for some reason, which can happen to any stock at any time. You know, most of you are investors in the market. You can see how, you know, markets fluctuate. There's just no getting around it. But like I said before, that also gives us the higher returns we can get with this. The other risk is that the option premium here on the stock would decrease. Right now we have a lot of volatility, as I showed you in that annual chart, and that's what gives it the ability to earn these higher than average incomes. And then the last primary risk is that the crypto price drops suddenly, and that would be due to, say, like the SEC last year got involved in some coins, or the government coming out with new rules or regulations, or could be any number of things. So there are some risks. No investment comes without risk. There's just no way around it. But in my opinion, the potential rewards are going to far outweigh the risk. So here are the advantage. You're going to have the compounding of wealth, i.e. the potentially free crypto. Because if you look here, you made your initial $1,000, or you made an initial $1,000 investment. But you can see how quickly after 20 weeks, you're going to have more in crypto than you even invested. And then after another 20 weeks, you're going to be at break even. So this is going to be like free stock, and it's going to continue, to kick off these and even less if you get called away. So for instance, $1,800, if this got called away 10 times, 10 weeks, within 2-3 months, you'd have this free stock, and this would just continue. Now, the other option here is if you don't take this money in either BTC or ETH, Bitcoin or Ethereum, you reinvest and you start to buy more shares. Now you get up to 200 shares. Now all of these numbers get doubled. Okay, so there's a lot of options on the back end of what you can do to continue to compound this. The second thing, it hedges your investments in case of a black swan event. And we talked about that. We've got a major election in the United States coming up. We've got any number of things that could happen, inflation, recession, that could really, really impact the financial markets. And hopefully the Bitcoin would remain a stable asset and hold its value. And then an advantage here is you'd be slowly building your wealth week after week, month after month, with a solid investment base. And then another advantage is you diversify your portfolio away from strictly stocks, futures, and equities into other asset classes. Sorry about that. The screen on my computer went blank. Hope it came back. So the place that I'm recommending you purchase your digital cryptocurrency is blockchain.com. I've used them for 20 plus years, and they're absolutely amazing. They're, in my opinion, the way to go. Give you a lot of flexibility, very secure wallet storage. But here again, look into them before you use anybody. And obviously, this is something you're going to want to do some research. Obviously, the other company is Coinbase.com would be the other one I'd recommend. Now, there's a lot of other companies besides Mara that you can use as what we call a surrogate investment for Bitcoin, Coinbase being one of them. But then the other one you may want to consider is a company called MicroStrategy. It's owned by a guy by the name of Michael J. Saylor, and he's, in my opinion, a genius. Some people don't like him, but what he has done with his company is invest in Bitcoin heavily, and so much so, in fact, that as Bitcoin trades price, they go almost hand in hand. So the reason I didn't recommend this stock for what we're doing is the price is much higher. It's several $100s. So you simply cannot get the leverage effect that you do with the Mara, it being at a price of under $20 a share. So you could do the same thing and eventually do the same thing with a MicroStrategy stock, but it will take a bigger investment to do so. So I'm going to, this video's already gone on a little longer than I had hoped, but I hope that that gives you guys something to think about. As I said, if you have any questions, concerns, like it, don't like it, leave them in the comment section below, and I'll be more than happy to respond. So also, if you wouldn't mind subscribing to my channel, I'd really appreciate it. So have a good weekend, everyone, and talk to you soon.